This is 95.3 Business Now.
Welcome back, everyone. The new Monetary Policy Committee of the Central Bank of Nigeria raised its benchmark interest rate by 400 basis points to a historic high of 22.75%, marking a significant increase from the 18.75% maintained since the last meeting of the Monetary Policy Committee back in July 2023. The MPC also jacked up cash reserve ratio for banks to 45%, while the liquidity ratio was left unchanged at 30%. Kelvin Emmanuel is an economist and a board member of Obsidian Atner Nigeria. He joins me now to discuss Nigeria's latest rate decision. Good morning and thank you for coming through, sir.
Good morning. Thanks for having me.
You're welcome. Was the big hike in MPR and CRR in line with your expectation?
Yeah, it is in line with my expectation. I mean, you have runaway inflation at 29.9% headline inflation. You know, that differential between the inflation to interest yield curve is 11.1%. It's been expanding. So hiking the monetary policy rate by 400 basis points or 4% to tighten monetary policy as a way to stop the flow or the capital flight of assets from from naira denominated to US denominated assets was the right thing to do. However, it comes with consequences, and the consequence is that commercial lending rates are going to go high, the non-performing loan book of banks is going to rise, and credit will become more stiff for the real economy. However, my own concern with the MPC, and which is an area I think they blindsided banks, is on the liquidity ratio that was kept at 30%. And for non-bankers, liquidity ratio simply, it's like the ability of a bank to meet its 30-day obligation, convert high liquid assets like cash, like treasury bonds and corporate debt, to be able to pay down 30-day obligations. I'm not going to go into the formula of how that is calculated, but CBN left it at 30%. And then they also raised the CRR, the cash reserve ratio, which measures all the deposits that are done to Nigerian banks and the percentage of that deposits that the banks are obligated to park at the central bank, which was 32.5% and was high because the global benchmark is actually 15%. And it's now been raised to 45%, which means that if you deposit 10 million naira at the bank, the central bank is obligated to collect 4.5 of that 10 million naira and keep as a cash reserve ratio. So my concern is, how do you stimulate growth in an economy that currently has a GDP growth rate less than 30% and is less than the population growth rate when you're raising CRR from 32.5 to 45%? It doesn't make any sense also because the liquidity ratio is high. The liquidity ratio talks about your highly liquid assets over your net cash flow. For you to raise CRR and then keep liquidity ratio at 30%. And it's going to be a very tough time for banks because yesterday at the exchange, when the markets closed, you saw banking stocks in red, and then you saw fixed income securities yield in green. There's a capital flight right now from the stock market to the bonds market, the fixed income market. So it is a bit of a conundrum. The MPC got the decision right on the monetary policy rates. But then the decision to raise the CRR and then keep liquidity at 30%, I don't understand it.
Well, again, the central bank governor is holding a conference call with international portfolio investors tomorrow, Thursday. What should be Cardoso's key message to the FPIs?
The key message Cardoso have to FPIs is that they can come back to the market, the stock market. Their participation currently is lower than 7%. They can bring money, those FPI dollars, which is needed to stabilize the FX market. But the question that he needs to answer them is on, the raising the MPR, reduces negative return on yield. The question he has to answer them is on the ability to repatriate their money, because FPIs are hot money. They want to come in and they want to go out. They usually don't keep capital in an economy for more than 2 years. So how will he assure them that if they are ready to repatriate their money, they will get liquidity in the market to be able to repatriate their money? And at what rate are they going to get it? Can he tell them today where the exchange rate is going to be 6 months from today or 12 months from today. Because if I bring in money, for example, into Nigeria, if I was an FPI, for example, I bring in money into Nigeria, the question I want to know is, am I able to buy instruments that locks in the exchange rate for when I want to take the money out, so that I can avoid a situation where the external risk of devaluation and depreciation of the currency is not higher than my internal rate of return? This is the major question Cardozo has to answer in that call tomorrow for him to be able to get the confidence of the FPIs to bring their liquidity into Nigeria and help him stabilize the exchange rates.
All right, Kelvin Emmanuel, an economist and board member at CBN Archana, Nigeria. We appreciate your time this morning on Business Now, sir. Do have a great day ahead.
Thank you for having me, and have a great day too.
Well, I'm Aramide Falorenshaw, and that's your Business Now for today, Wednesday the 28th. Have a great day, everyone, and bye for now.
This is 95.3 Business Now.